what was it, 15 minutes before this market opened? It's been falling and falling and falling and falling and falling and falling ever since. Hoo-ha! Love it when a plan comes together, huh? So anyways, hey, it's a Monday, yo, 7:30 in the morning, 7:38. Monday, February 8th, 2016. This is your daily Forex trading strategy session. Let's get this place fired up and ready to go. So good morning, glad to have you. I'm all fired up. Let's get going. But before we do that, let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And yes, I do have 2 cups of coffee in front of me today. I like the way you trade. It's one of those days. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com and ECN. It gives you direct access to the Forex market, but also energies, metals, and stock indices, and all these things that you need to look for. Currency correlation, intermarket correlation, risk on, risk off, commodities on, commodities off, everything that you need to trade without being blind. And then we enter your trade in that interbanking system with no drama, mama. At a fair, reasonable price. That's a good business model, in my opinion. We do these sessions every day here at Forex.Today at 7:30 a.m., Monday through Thursday, every Friday at FX Street. I thought I'd add a new slide just to kind of start out the day. This is generally the stock market indices as of just a couple of minutes ago, as well as gold and oil. Let me get my drawing tool. And I thought this might be an interesting way just to get our heads screwed on straight before I jump into technical analysis of Forex. So hopefully, if you like it, let me know. If you hate it, let me know. All right, so starting on the bottom right-hand corner, we had Nikkei end the week at exactly the weekly pivot point. Isn't that interesting? It ended the week on the weekly target, gapped up, dropped like a ton of bricks ever since. We're almost right back down. Right? So if you're a bear and you're using pivot points, weekly pivot points, what are you supposed to do? You're supposed to sell somewhere between the weekly central and the M3. And that's that area right there. And guess what it did? Isn't that nice? Opened up here, fell. So, you know, I know it's only been down for 12 hours, but what are you going to do, huh? Be careful on the gap fill, but whatever. Okay, going over to the euro, right? This is the euro 50. And it ended the week just below the weekly target. Bounced up into the moving averages. This is the 1 hour chart, so right into the hourly 21, straight down like a ton of bricks on the open. Okay, so you have Nikkei down, Euro stocks down. This is DAX. It opened up, went to the hourly 21, and also dropped like a ton of bricks. Cool. And what about the FTSE? The FTSE did not hit the weekly target last week, so it was an inside week. Came into the hourly 21, actually hourly 55, but then dropped. You see a theme going on here? Here, this is the Dow futures. retrace back up to the hourly 21, but also between the weekly central and the M3, which is a bearish sell zone, and it dropped. S&P 500 rallied up to the hourly 21 and then dropped. Gold went up. Well, I should probably continue the theme. Okay, came down and then rallied up off the hourly 21. And oil rallied into the weekly central pivot point, 2155 hourly cluster, and also dropped. So oil down, Nikkei down, Euro stocks down, DAX down, FTSE down, Dow down, S&P 500 down, gold up. Aha! Interesting stuff, huh? Can you see the correlation? Okay. Look, if your resolution's lower than my resolution, then you just need to click the button at the top of your chart that says, you know, I don't know what you see. There's a button that says, you know, center it or something like that. Can anyone help Mass out? Is it Mass and then Russ? Okay. So you just, yeah, your resolution's low. Maybe you're on an old laptop or something. Okay. So anyways, beautifully correlated. And we need to pay attention to that. That seems like risk off, right? People are buying gold. Stock market down. So anyways, so during the Asian session, right, third month of decline in foreign reserves. Only, right, only 3 trillion held in the Bank of China. But lowest in 3 years, yo. Premier Li stated that China will not boost its economy via yuan devaluation. Well, we'll see. We'll see. But that's what people are expecting. So, do you know how you can tell if a central banker is lying? Their lips are moving. So anyways, Premier Li says China will not boost its economy by devaluation. So guess what? They're going to devalue. So get ready for that. Hey, Saudi Arabia met with Venezuela. Venezuela's like, what the heck are you doing? You know, Venezuela is so messed up as a country. I think their break-even point on oil is $110 a barrel. I can't confirm that. I did read it somewhere, but I read a lot about oil these days, and it sounds hard to believe, but I don't know. It's Venezuela. But anyways, they're freaking out, right? The founding member of OPEC is Venezuela. They're freaking out right now in Saudi Arabia. Because Saudi Arabia is like, yeah, let's bring it down to, you know, $15 a barrel. 15! You know, I think Azerbaijan and Kazakhstan are also in serious trouble. Boo-hoo for Baku, huh? So anyways, that was interesting. And then North Korea fired off a long-range missile. No. World doesn't like that. But what do you do when stuff like that happens? That's called geopolitical risk. And you get a weird scenario like gold up and dollar up. Let's look at, I don't know, Euro USD. You guys know that? Yeah, when missiles fly, you buy the US dollar. And it shows you, even though gold is up, dollar's up at the same time. That's unusual, isn't it? Right? Isn't gold the anti-dollar? Well, gold is strong and US dollar strong. Why? Well, you get that when missiles fly. Okay, that's geopolitical risk. That's safe haven flows and stuff like that. Okay, so just keep an eye on it for that. All right, during the European session, there's a bunch of news. I don't think any of it really matters that much. Bank of France business sentiment. All right, that's the best in a long time. 101. Good job, France. Czech unemployment. Eurozone investor confidence. Blah 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 blah. So, anyways, this is a big nothing. Hey, could be worse, right? And then, coming up, just things I wanted to want you to think about. This week we got Yellen testifying. That's a big one. Okay, that's going to be a doozy. That one's hard to play because you don't know what she's going to say. And we're still kind of debating, what was that NFP all about? Was it good? Was it bad? Was it happy? Was it sad? Well, all I know is I hope you sold it at 112. Baltic Dry Index coming up today. Great. Canadian building permits. Woo! Look at this. Minus 19.6% last month. They think it can't be worse this month. Uh-huh. Anybody think it could be worse? I think it could be worse. They're like, it can't be any worse. It has to be a positive number just because it's so low. Uh-huh. Let me tell you, son, it can get worse. And then this evening or tomorrow, wherever you may be, Australian business condition release, business confidence. Well, it's something, right? Aussie's the ultimate scalp. And Aussie US dollar still easily above 70. Chinese yuan is weakening against US dollar right now. And without further ado, right, let's get into it. So what you see up here are live charts. This is the euro versus the dollar. This is what I want to show you. Gold is going up, and this euro dollar falling. It's not necessarily euro falling, it's the US dollar rising. So you could look at this and think gold up, dollar up, and that's not your typical correlation. So something's going on there, and that might be missiles flying and all that kind of stuff. Or it's just simply flight to safety where yen is strong, dollar is strong, and people are buying gold. That would be your typical situation, right? When you think ultimate flight to safety, risk off, dollar strength, yen strength, gold strength. What about Singapore dollar? Anyone following Sing dollar? Daniel, do you get how does it look? Is it strong right now? Thank you. So that's another thing. Yeah, that's what I would imagine. I mean, I could put it up here, but I might as well just ask Daniel. Another thing, another flight to safety would be pound Swissy. And that's daily. Let's go into hourly. Okay. And notice that gray area, that's our sell zone. Right? That's our sell zone. How lovely is that? Question is, did you sell it? Isn't that neat? Cool. But yeah, so Swiss franc is strong, at least relative to the pound, but I would assume it's all the same thing. Cool, right? Look at this. Down to the 21, down to the 21, down to the 21, down. Yeah, complicated, right? So we'll see if this is going to last all day or if this is just sort of an open to the week. So are people back from New Year holidays, or do they take the whole week off this week? What's going on in Asia, guys? Are people back? Is it full trading days again or still holidays, huh? Well, yeah. Dog monkey baby. Whole week for China. Wow. And I thought they're capitalist. They must be socialist pig dogs to take a whole week off. Wow. Sucky time. Yeah. I've been drinking a lot of sake lately. Yeah, sake's nice. Getting into it. Someone told me you can marinate your steak in sake. I don't know if that's true. Yeah, I suppose anything's true, right? But I don't know if it would taste good. But anyways, nice moves here, right? Current top, if you look at pound Swissy, is daily M3. So today's target is going to be, what is that? 142.80-ish. Very nice. Okay. So so watch the intermarket, right? See if we can catch some correlations. Why don't we start on some yen pivots? Does that sound good to everybody? Okay. Okay. Weekly central pivot point, weekly M1. Whoop. That's an awkward space. Now, why is that an awkward place? Because it's Monday morning. Now what? Right? Right? Like, what am I supposed to do now? We just hit our target. Often, though, when your weekly pivot is the top, very often you can actually catch the weekly S2. So this gets us down to 29, and just below that, there's a monthly at 29.60. So maybe this goes down to, let's say, 28.50, maybe. But that's pretty aggressive. Oh, look, the sun's coming up. Hallelujah. Nice. So, yeah, so anyways, that's the concern because we've just hit our target. What do you do after, if you hit your target early like that? It's an additional risk because something unusual needs to happen. And something unusual means risk, right? Something that you can't count on. But if you sold at the weekly central as a bear, right? Like I've spent a lot of time on pivots lately, and that's what you're supposed to do, right? Right? That's it. If you're a bear, you would have sold there, and then that's it. You got paid, maybe too quickly, but sometimes that's cool. And then here we are in USD yen, and what we know is there's a little more yen strength than dollar, and dollar is strong. Okay. The numbers on these are just pivot points. Okay, so this one I'd be careful with because it's more neutral than the others. I'm wondering if I'm going to be able to buy it at 115 this week. So we'll see. Okay. And here's our CAD yen. Look where our sell zone was. Okay, I'm sorry. We didn't quite get there. What did we miss that by? 25 pips on a 4-hour chart. 25 pips is right, like a small chunk of corn. So anyways, on our way down, there is a pivot cluster at the weekly M1. You see that? You zoom in here. Okay, we got a monthly pivot, monthly M1 and monthly M2, weekly M1 clustered right around this 8250 area. I'd be careful there. Because if you were a bull, if you wanted CAD yen to go up on the monthly pivots, I mean it's February, right? February. So somewhere around there, if you're a bull, if you could buy M2 going out to the daily chart, that would predict an M4 rally, and monthly M4 is 91, 90, 90 and 90 and a half, I guess is what you'd call it, right? So what are we talking about here? We're talking about 8250 to 9050. I mean, that's a lot of pips, right? Right? That's like what, 800 pips? Well, we need some good news. By the way, 10-year gilts just hit 1.49. Holy schnicker schnocker. Let's see. Live 10-year T-note yield. I'll try CNBC today. Wow. Is that right? 10-year. Oh, holy smokes. So guess what people are using their US dollars on? US dollars strong. What are they doing? They're buying 10-year T-notes. Holy smokes. What a rally in the bond market, huh? Wow. I was prepared to see like, I don't know, 1.85 or something. 1.785. Wow. Holy smokes. That's crazy. Wow. That's just crazy. We were at like, what is that? 2.4, then 2.2, and then 2.0, 1.78. Wow. Holy smokes, eh? And so that's a couple of things. That's people betting against the Fed, but also in the last few days, that's just people buying bonds, maybe, I don't know, fear of something. Wow. That's crazy. 1.791. Wow, just that's bad. Holy. I used to have a theory. Let me be open and honest with you. Back when the world was normal and it was collapsing for the first time, so like what, 2007? I actually had a theory, right? It's a 10-year treasury, Ryan. U.S. Treasury. A bond. U.S. Treasury. U.S. bond. All right. I used to have a theory back when the world was normal and it was coming back together. I don't know if you can see my fingers, but I thought sort of the world worked where can I do it that way? Where bonds and commodities and all these other things, they worked like a clock works, right? Where you had all these intertwined sprockets where if the 10-year T note moved down, in yield than the 5-year, the 2-year, the 1-year, the 3-month. They would all move in unison, and that a 10-year T note would hit 2% when like a 30-day would hit 0. So I used to have this theory that if if the if the 30-day, right, if the 30-day hit a yield of 0, then what's the point? You wouldn't buy anymore. And there was a day at the worst time of the crisis that the 30-day actually went negative, and then of course stopped, right? Because people don't want to pay for the privilege of buying, So, anyways, that it would all stop, and that the 30-day, the 90-day, the 1-year, the 2-year, the 5-year, and 10-year would also stop. Like that is the lowest possible. Okay? And that the lowest yield possible on a 10-year T note, well, my theory at the time was 2.0, because when we hit 2.0 on the 10-year, the 30-day would be at 0, and everything would stop. And that worked really well for a very long time. But now for, I don't know what, the last 4 years, we've been below 2%. But 1.79, wow, wow, people are really buying bonds. Holy smokes. So if they're buying bonds, what are they selling? Money's got to come from somewhere, right? It's not like they just print some money and buy some bonds. That's what a central bank does, but not investors. So what's going on? Stock market has to come down. Did we see the stock market fall? What did I start out with today? Nikkei down, Euro down, right? Euro stocks. DAX down, FTSE down, Dow down, S&P 500 down. Apparently, 10-year T note up, which means prices rise because everyone's buying 10-year T note, and yields fall. Just a quick update. FTSE's down 2.25%. DAX is down 3%. CAC in France, which I didn't cover, the CAC is down 3%. Oil is down almost 4%. S&P 500 down 1.5%, and we're still about 90 minutes away from the oil, from the oil, from the open. Okay. Very precarious. What would turn all this stuff up? I don't think we really have anything on the calendar to say, that this is going to rally things up on the short term. Right? So here's Aussie yen. We actually made it through that support line, eh? Okay. Now, can you see this old trade plan up there? Right? See this old trade plan here? Double bottom into the roll reversal up. Not a bad plan. And of course, fizzled out right before NFP, and then NFP came in. So the question is, do you change your plan, or do you just find the next level of support, which would actually be coming up soon? You see what I mean? So plan B might be, so we're here now. What if it was like that? Okay. If you're a bear, you just play the price action, right? And it's going to be shorter term. That's the price action. Guess I should have done it with my drawing tool, right? But like lower low, lower high. Why did it fall there? Well, just like I've taught you, you take the old support, you bring it across, it's near new resistance, and you sell. So now it's a low. Hopefully it makes a lower low. But at some point, if it comes back and you're still a bear, that's where you're going to sell it, right there. Okay. So you have to ask yourself, where's the next level? And why would it be support? How about this? And this is, I got to warn you about this. So you got to be careful though. Let's say you get down to here, and that's 80, 50-ish, just below 81. You have a monthly support pivot, weekly reversal pivot. Something tells me that this is going to be a big deal, and you should be careful. If we hit this area today or tomorrow, then by the end of the week, we're going to be up here. And we're going to test this weekly, monthly cluster. Okay. Oh, yeah, you're worried about the DAX? Well, I can go back to the DAX. Okay. Because when Draghi increases quantitative easing, the DAX is going to rally. So you're going to have to go out to a longer time frame and start finding places you would like to buy. Okay. We are coming into a zone. Let me just do some highlighting here so we're all on the same page. Okay. This whole area here looks interesting, right? Right? You got it? Okay. Let me get rid of that now. And now if you actually pay attention to the pivots at that level, I've got to really zoom in here now. Okay. We have the weekly target. So the weekly target based on weekly pivot points is this area here. But on top of that, we have this dark green line, which is a monthly big pivot. And here's the next one, S2, right? So you add that together, and based on pivot point theory alone, if it's going to rally, this is the place to look for it. Doesn't mean it will. I mean, look how solid this trend is. Down, back to the 21, sell. I mean, just the same as we do a 5-minute chart. This is daily on the DAX. Trade it the same. But if it was going to rally up, man, that would be hopeful. Okay. Was it different? No, actually, it was easy, Ryan. Yeah, 2008, I built a golf course in my backyard. We had to bring out heavy equipment, bulldozers and bobcats and stuff. And I named it, right? I named the course Pound Yen, if that's a hint. Now don't get excited. It only had 2 holes, so it was like a poor man's golf course. But it had we had regulation pins, and instead of putting greens, I brought in something like 20 tons of pea gravel, and it was really cool because when you took a wedge, it was all just wedges, right? So you'd take a 60 degree or 56, And you hit it as hard as you can. Wham! The thing goes, I don't know, you want to hit it, I guess, 110 yards or something. It would have been maybe. And what it would do is if you hit the pea gravel, the ball would just stop. It just boom right into pea gravel. Oh yeah, well the fairway was grass and stuff like that. But anyways, yeah. So that was all because of the pound yen. So yeah, it was a good year. Okay. Yeah. So what else could you do if you were looking to buy it? Okay. Here's weekly, right? And I know we're going to have a ton of lines here, but um, we're just about 50% retracement here. So let me tell you the thought. Okay, if you buy it somewhere between 50% and 618 of this move, I think it'd be good. This is weekly too. Now, this move here is quantitative easing. And when a central bank does quantitative easing, it's to increase asset prices. Guess what? That means stock market goes up. So we're in a supportive zone. We're somewhere between the 50% and 618. And there's a pretty good chance in the next 2 to 6 months, we don't know how slow they're going to be, that they're going to add new quantitative easing, right? They've already extended how long. So when they said we're going to do quantitative easing down here, they told us how much and how long. Somewhere recently, they told us that they're going to do quantitative easing for longer than originally stated. Now what we're waiting for is that they do more for longer. And the general theory of, or the consequence of, the most likely consequence of that action would be increased asset prices. Okay? So if you're going to buy Germany, I would expect it's either about to happen this week or within the month, let's say. Is anyone interested in buying Germany? Any German companies you think that are cheap now that will be around 25 years from now? So if we take this off the 2011 bottom, okay, check it out. 2011 bottom is almost exactly monthly S2. So now I got to go back in. Let's go back to a daily chart now and then zoom in. Look at that. Monthly S2, 50% retracement, weekly reversal. Like I said, this could be a killer buy zone. So while everyone else on TV is freaking out, I think you should be preparing to make money. Okay? Make sense? Or go ahead and freak out. Do whatever you want to do. Right? Whatever. Hey, if you want to freak out, go ahead. Why should I stop you? It's the end of the world as we know it. So, yeah, so wouldn't it be nice if we start today much more positive than the rest of the world? Wouldn't it be cool if the yen pairs rally now? Can't see. Sun shines in my eyes. Right, 82 on the Aussie yen. What do you want to be long? Right? Do you remember I asked you at the beginning of the year to write down some bullet points on like 2 or 3 things you want to do for the first few months. Are you going to sell yen? Well, yen is strong right now, right? But doesn't mean it's going to be strong at the end of the day. And to sort of to say it differently, you can't sell it now, or I mean, you can't buy yen now. It's already moved. Why would you do it now, right? So, are you going to be short term long while you wait for double bottoms? Like, what is the plan? Right? Joey says down to 116. Yeah, 115 would be better, right? But and right, so if USD yen is going up, it's mostly yen going to weaken because the dollar is strong, but the yen was strong too, right? So I guess we'll use this chart here. Okay, this is a pretty easy thing to look at, right? Like that is support. Am I right? Is there any debate on that? So what are you going to do is the big question, right? The most conservative thing to do here is ignore it and say, well, Wayne, we need to break this. We need to go to the 55, and then it's going to come down, and then maybe I 1, 2, 3 this up. So you might say, well, I might buy it on Tuesday. Right? You see what I mean? But could you sell it here now? No, I mean, right? That's just so dumb. It's hard, right? Hard to imagine that someone would do it. So you kind of got that action. You had that opportunity, this morning, right? 8 hours ago. And that's cool if you're going to sell it. That's how you sell it. And I'm not saying buying yen's bad. I'm just saying, buying yen at support is bad, right? To sell USD yen here just shows you're not, you have no plan. You've done no analysis. There's no nothing, right? Just no nothing. Okay, so I think it'd be more interesting what's going on in here. Okay, now if you had to scalp and you had to buy yen, meaning you have to sell USD yen. I don't know if you want to sell USD yen because I believe USD is strong, but let's just say you're not looking at it on such a small or longer time frame. Let's say you want to sell and you are eyeballing this area here for a sell. Well, I'd rather you sell it at 80 than at 50. Okay? So then you drop into maybe like a 5-minute chart, right? And maybe you do something like this. Okay? Okay, that's cool. If you want to do that. But I think there's got to be something better for you to be interested in because based on everything I've already showed you today, the US dollar should be strong. I mean, every stock market on the planet's down. So if you were going to sell something, I don't know, how about Beast? You know what I mean? You got to get good at finding the right pairs, guys. It's going to help you, right? It's going to help you. So like, look at this. That was a tough trade, right? Did you sell it at 70? It's 67, guys. The top is almost 70 and a half. So Rick says dollar strong for the short term or for the week? Well, looking at the dollar index, we have a huge bullish engulfing candle, a 3A2 Fibonacci retracement, a bounce off of a pivot, a higher high, and we're up to the 4-hour 55, which would suggest from there a higher low, higher high. So it seems, it seems to be at least a medium term. The daily chart wants to do a full cycle up. So this is up for maybe most of today, down for partially for tomorrow, and then up for the rest of the week. If you want me to just throw out a guess, just based on Dixie price action. Okay. But look at that, huh? Isn't that beautiful, guys? I'm just enjoying my coffee. Hope you don't mind. Okay. Beauty, right? Beauty and the Beast. So let's find out what the world's doing with its money. What does this tell me? The world is not moving to cash. Okay? They're not moving to cash. If they were just putting money in their bank account, the Swissy would be a lot stronger. What they're buying is JGBs. And based on a yield of 1.78 on the 10-year, they're also buying U.S. Treasuries, right, as well as Japanese government bonds, JGBs. So they're buying Japanese yen way more than they're buying Swiss franc, and Swiss franc is strong. But they would much rather be holding Japanese government bonds, so they're buying yen like crazy. Okay. Now, did anybody tell you that the beginning of the year was going to start with Japanese yen strength when we were near 125? Did anybody mention that? So now that really, we talked about it all summer and all fall and all that kind of stuff. Has it made an impact yet? Like, have you, taken notice and said, holy snap, he's right? Not that I'm right, but that it happens, that you can count on it. There was this time when I was teaching people about having a sellable trading idea, and I said, well, I know what I'm going to be doing for almost the end of the year. And they're like, what do you mean? I'm like, well, I know that I'm going to sell Euro USD next week and the week after and the week after that. I know that I'm going to be selling Japanese yen. And I'm going to, even though it's a bit of a struggle, I'm going to keep buying dips. I'm going to sell Japanese yen until the second week of January. It wasn't even like December. It was like the second week of January. And we could talk about it like casual conversation in August. That in August, I'm selling Japanese yen, right? Actually, the third week, right? The third week of August, let me twist this, right? No, like this way. Okay, the third week of August, I'm selling Japanese yen. In the second week of January, I'm buying Japanese yen. Was it that clear, guys? Can anyone attest to that, whether it was that clear the third week of August? I'm selling Japanese yen. The second week of January, I'm buying Japanese yen. Isn't that crazy? Well, so Artem says, well, what about February? February is an awkward one, and I'm not in control of that. What happens is um, anything could take over, right? So right now we are worried about macroeconomics. We're worried about the is the China slowdown going to be a contagion? North Korea firing missiles, oil at $0 a barrel. There's a lot of stuff going on that says you should unwind your risky trades, right? So February, I don't have much to say about ever. It depends on what's happening and what the sentiment of the market is. It's not risk on right now, it's risk off. And I think a lot of it is also rebalancing and so on and so forth, but whatever. Now, we did mention the third week of February, and it was really a play on this idea that by by the end of March, money that needs to flow to Japan for fiscal year end reasons needs to happen. When does the finance, the director of finance for Mitsubishi, when does that person decide to repatriate money home? Is it 5 weeks before the end of the year? Is it 5 days before the end of the year? I don't really know, right? I mean, how could I know that? It's all going to be different. But March, I generally look for yen strength as well. Does that mean February is a weak? Well, I can tell you like the last few years, January's brought like the yens down, February has moved the yens up, and then March moved it back down. So I can remember being up, 300 pips, but only walking away with like 150 or something like that because I locked in a small profit and I thought, well, if the yens rally and we head all the way back up, I got myself 800 pips. Well, instead of 800, I only get 150 or something because the repatriation flows were bigger, or and they just come in, and you find yourself back. So typically, what you see is January they come down, February they're up, March they're down, April they're up, May they're sideways, June they're sideways, July is sideways, August I start building positions, and then September, October, November, you get carry again. So this isn't crazy unusual flow. The yen strength is moving not just based on taking profit on carry trades at the end of the year, which is a typical thing, right? And then yen strength in March because of fiscal year end. That's pretty normal. That's just money flow. So on and so forth. Bounces at support are pretty normal in February and April. It's not crazy unusual, but what's dictating this year versus other years? Well, oil, ridiculously low prices and such, right? So here's what I said earlier, going back just a few weeks. We need Draghi to tell us he is going to add to quantitative easing. Euro weakens. We need the dollar to strengthen. Is it because stocks are going up or bonds are going up? Couldn't care two hoots. Okay. Does that make sense? That's just a quick macro econ. And what else do you want? You got one more currency. Give me a currency, any currency. No. Charles, you're not listening. Those are both going to be relatively strong, Charles. Yes, USD Swiss franc will go up, but we're talking safe haven flows, And USD, the US and Switzerland are safe havens. So on the USD Swiss franc, Charles, no. Is the US in the recession? No, Hans. The US is the only country in the world not in a recession. $40 a barrel? No. Oh, by the way, in my research for the oil industry, BP is revising their global outlook, and I'm going to attend their webinar for industry analysts as they explain their revisions to their outlook, which is nice, right? So I'm just saying, where do my opinions come from? Hardcore fact. Most opinions that you're reading about in newspapers or listening to on TV, it's almost like they're selling a book, right? The sensationalism gets your attention, but almost none of it is real. It's all fantasy. So I need reality here. Okay? And so is oil going to go to $40? Well, really, whether it's 30 or 40 doesn't matter at all. It's pointless. So yeah, maybe whatever. But it is a fact that we have lots of supply, and that currently supply is not going to change. Saudi Arabia, is meeting with Venezuela, and Venezuela is freaking out. But I don't think they're going to make a change. I think they have a really hardcore plan going on, and they want to drive this down. And let me put this also back into fact. In previous drops in oil, we can easily go below 30. I'm not saying it will, but it just totally can, right? One of my buddies over the weekend was saying, "Hey man, should I be buying oil at $30? It's got to go up, right?" I'm like, that's stupid. So let me put it into context, right? Oil dropped to like, I don't know, $10 a barrel in the mid 80s. In the mid 90s, oil dropped, to 10, $20 a barrel, right? 2008 dropped to 25 or $30 a barrel, right? It happens almost every 10 years, guys. It's like we forget. If Saudi Arabia wants to drive it down to 15 or 20, it will. It can. There's absolutely no reason why it can't. The big question, can it go back to 50 or 60? Yeah, but Saudi Arabia would need to cut dramatically. We would need, like, Russia not to provide oil, and Venezuela and Azerbaijan and Kazakhstan, but they're all going to lie. So if Saudi Arabia says, okay, we'll cut to support oil prices, supply is not going to go away. The Russians are going to lie. The Kazakhs are going to lie. The Venezuelans are going to lie. They're just going to pump oil because they need the money. They're desperate. All these economies are about to collapse. Okay? But, so whether it goes to 40, whatever, it's just a price action play. But let's talk about supply and demand. Are we going to run out of supply so that oil prices just have to go up because we're running out of oil? I mean, seriously, no. Even if Saudi Arabia cuts, yeah, okay, maybe it spikes to 40, but then we're going to find out supplies are actually going to go up. With Saudi Arabia will cut. They won't cut a lot. And then someone else is just going to break the pact, right? And Venezuela will just pump more oil because they need the money. So they're just going to lie. It's just what happens. It's only been happening forever, right? So whatever. So Saudi Arabia pumps less, Venezuela pumps more, and nothing's changed. Oil prices come right back down. You see what I mean? Is there anything in the world that will just dramatically increase demand for oil? Suddenly we just can't get enough oil. Just like, wow, that's radical increase in demand in oil. Holy smokes, right? Probably not on the short term, guys. Right? So just think about it that way. Because you can't, let's say you're trying to raise, $10 million from a client. You can't just say, well, I think oil is going to go to, $60. You kind of have to say why, right? So what dramatic increase in demand is going to happen in the next 6 months to dramatically increase oil prices by 50%? What dramatic event is going to drop oil supplies? I don't have major answers for that, right? Okay, maybe Draghi does some quantitative easing. That would be very hopeful. But is that really going to increase demand on the short run? What's going to dwindle our supplies dramatically in the short run? Okay? So if you look at past history, if you don't mind, and I've been going back over 100 years looking at scenarios like this. The closest model that I have found, and I'm not joking, I actually went back 100 years. I've studied every decade of oil since the late 1800s. Isn't that funny? It's weird, right? But this is what I do. The closest model that we can use as an example of what's happening today versus what's happened in the past, right? It's a supply issue. It's a technology breakthrough. Okay? It's not the IEA, it's not OPEC, it's all this stuff, right? So, I think it was 1908, East Texas, when the technology was developed to drill into salt domes. Anybody here from East Texas? I think there was a guy here the other day from East Texas. They called it, I think it was called the Black Giant. Is that right? And what happened was they created a new technology to get oil that was not achievable to get earlier. And all of a sudden this stuff came out of the ground and it was like an amazing amount of oil. I mean, it was amazing amount of oil. And then all of a sudden, independent oil drillers, known as wildcatters, thousands and thousands and thousands of people showed up and built wells, almost like a gold rush. Like literally overnight, you had oil driller next to an oil driller, like 5 feet apart, right? And there was 1, 2, 3, 4. There's thousands and thousands and thousands and thousands. Just like it was like New York City and skyscrapers, but out in the middle of East Texas. I mean, no joke. If you look up the old black and white pictures, you'll see a field with like 10,000 oil derricks, right? Like 10,000. And they're all independent owners. And I say the whole independent owner thing because up until that, you had like Standard Oil out in Ohio and Pennsylvania and stuff like that, drilling oil. He didn't drill oil, but but whatever. Let's say it was in control. You had Standard Oil. Sorry, what was I saying? I was saying Rockefeller, right? But anyways, there was someone in control that could say, stop drilling. Oil prices are too low. Supplies would dwindle, demand would increase, and then price would go up, right? There was like basically one power that could say, stop. We need to support prices. When East Texas came out, nobody was in control. You see the similarities I'm getting to now? New discovery, new technology, and a market completely run by independents. And what happened was oil went down and down and down and down from like $80 a barrel to $1 a barrel. And these guys still kept pumping it. Still kept pumping it. It got so bad that the United States government sent, you listening to me? The National Guard. The United States government sent the National Guard with rifles, thousands and thousands of troops went into the field, got every one of those drillers to stop drilling and kicked them out of the field. And if they entered the field, they would be shot dead because we needed oil prices to go up. And they were at like zero, guys. Zero. That's the closest thing that we have now. Okay? So if OPEC's a mess in my opinion. So if Saudi Arabia cuts, well, Russia and Venezuela for sure will just produce the oil and oil prices don't go up. So they're losing their control. But even let's say if oil goes to $70 a barrel, then the frackers just come in the United States and there's thousands and thousands and nobody's in control. It's just some dude on a farm in South, boom. And prices come right back down because they can pull oil out of the ground in 30 days. They're producing oil and it's in the market in less than 30 days. So if prices come up, thousands of guys just produce oil, price comes right back down. Nobody's in control. OPEC can't do anything about it. Oil's not going to go to $200 a barrel in your lifetime. Okay? So does that mean it could go up to 40? Who cares if it goes up to 40? But let's talk about like the real numbers here, right? And that's where's the supply, where's the demand, where's the change in trend, where's the new equilibrium price, and then in the future, will demand or supply be restored to their, let's say, to normal levels? And if so, what creates these things, right? And it just comes down to, in the next 3 years, oil's going to be somewhere between 20 and 60. So where's the supply cut going to come from? I don't see that happening, so I don't see why we can't be at 20 before, or 20 just as easily as we can be at 40. And that's just price action now. So you're saying 40, I'm like, yeah, it could go to 40, but it wouldn't matter. It wouldn't change anything. It can go down to 20. Yeah, but that still wouldn't matter. It wouldn't change anything. Okay, whatever. It'll probably do both. It'll go to 20 and then it'll go to 40 and then we'll come back to 30. I mean, it doesn't matter. It's just price action. Now you're just trading. Certainly didn't want my buddy to say, oh, hey, maybe I should throw money at some oil. It can't go lower. Yeah, there's a red flag, right? That's why it's not good for amateurs. You shouldn't throw money in there, right? So I don't see a major change in policy. If it leads to war, okay, if it leads to war, and these things lead to war, right? Remember Iran and Iraq? What do you think they were fighting over? The Iran-Iraq War. Freedom? Yeah, maybe oil was involved, right? And then when that war was done, Iraq was actually dead broke. And they owed billions and billions and billions and billions and billions of dollars in war debt. Guess who they owed the money to? Kuwait. Uh-huh. Also, Kuwait has oil. Could get a twofer out of that run, right? But can you see how it's just like, whoa? Pieces start falling into place, right? Yeah, but the question is why do they want to take over Kuwait? Well, that's who they owed money to. So they figured, well, why don't we just take Kuwait? Now we don't owe them anything. So someone was desperate. Let's just put it that way, right? So, anyways, this is a conversation for a pub. I think we could sit here and talk. But I hope you do appreciate. I spend 20 at least 20 hours a week researching the oil industry. And like I've said, I have studied now since the original oil. Rock oil is what it was called. Because in the beginning, where did you get oil from? Olive oil. You got oil from olives or whales, right? And then someone said, well, what about this stuff that's seeping out of the ground? It seems to be waterproof. You can make roofs out of it, and the Indians use it for canoes. It just bubbles out of the ground. Oh, yeah, rock oil, like olive oil or like whale oil. Isn't that funny? But it's actually petroleum. But rock oil. So from rock oil, and by the way, what happened when they started drilling and there was a boom? Oil prices went to zero. There was a guy in, what was it called? Oil City, Ohio, I think it was. Oil City? Oil 10? I think it was Oil City. A guy bought a piece of land for $2 million. I think it was 1 acre of land for $2 million in 1870, whatever it was, like a long time ago, right? 2 million. A month later, he sold it for $2. Say what? What happened there? Oil went to zero. Apparently, people didn't want to drill anymore because no one was in control. So who stepped in? John D. Rockefeller to say, whoa, 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 someone needs to be in control of this. Someone needs to control the whole process so that prices can be stabilized. So we don't keep going boom and bust, $100 a barrel to zero, back to 100. Someone needs to control this whole thing so it's logical, right? And guess who became the richest man of all time? The guy that stabilized oil prices. Yeah. So anyways, I love you, babe, but I got to jump. Peace on earth. May the pips be with you. May your profits be above average. And you want to meet again tomorrow? Sure. Cool. That sounds good. Is it free? Sure, for you. But why don't you open up a trade account at TradersWay.com? Even if you don't have any money, how about a demo? Just show your thanks or your loyalty that way, and it would be greatly appreciated because we do want to earn your business. And how we do that? By making you a better trader so that you're confident and you're skilled, and when you start and you're profitable. How about that? Okay. And it turns out I am Speaker of the Year at FX Street. And I thank you for your loyalty because I know you're a big part of that. So bravo to you. Thank you. Yeah, cool. Thank you. So I hope it's a sign that you are developing skills and confidence. And if so, then we all win. And then that makes me happy. So like I said, hey, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Cheers.